Hi, this is Randy Finney with Right Side of the Chart, and this is a market update for Thursday, April 11th, 2019. It is 10:55 a.m. Eastern Time as I'm starting this video, so almost midday now. Just want to do a quick update. Again, we don't have a lot of new developments, but that doesn't mean we don't need to, keep an eye on things. Again, I like to get these levels out ahead of time in advance in case we get anything moving fast, because it can take a while to do a video or mark up charts and get things out. So again, slow grind, same old, not a lot of new developments. Let's just do a quick review of the charts. Daily charts, I've just cleaned this up to a very simplistic view to just focus on what's important right now, and that is the SPY making this slow grind higher on diminishing volume lately, not far off its all-time highs, but still not there yet, with negative divergences that continue to build. We don't have it confirmed yet. Confirmed, I want to see that PPO make a bearish crossover right there, put in a lower low, but it's certainly the potential right now. So there it is. So we have divergences on the daily time frame building, haven't yet broken down. Yeah, we might be able to draw a trend line here, but I'll tell you, I'd be forcing it a little bit to draw that trend line because we don't have a lot of reactions. But if we want to do that, keep an eye on that. But I'm going to get to the 60-minute charts in a second. Let's focus more on those. QQQ, same thing. This is a stripped down, clean version to just show the what I believe to be the most salient points on the daily time frame, and that is the negative divergences that have continued to build. We're still not yet quite to those 2018 highs. Whether we hit them or not, technically, it's not. It isn't going to mean a whole lot unless we blast on through there, a breakout, a back test. We'll have to see the action around this level, whether we fail, reverse. It may take a while to extract or to be able to really interpret anything new in the technicals. In other words, do these divergences get burned through? Again, do we break out? Is the breakout impulsive? Is it on a volume expansion? Do we come in and back test that level? Do we get a failed breakout? A lot can happen. So let's just take it one day at a time. And if we want to try to make an uptrend line off the lows like I just did on SPY, let's do that like this right here. There's our trend line. That's certainly a level to watch. 3 reactions gives it enough to be valid, and again, I've shared some similar comparable trend lines on a lot of the market leading FANG stocks, so let's watch that. So that's the daily chart. Nothing new yet, just a slow grind higher, but let's go to the daily chart, or the 60-minute charts, and we'll see what we can extract there. All right, I've added a couple of new levels, well actually only one level today, and I shared this in the trading room earlier. This trend line here, I'm going to zoom in a little bit. Again, this is a 60-minute chart at NQ. It's all about tech. You're going to need to see the Qs break down in NQ. So again, let's forget about the ones that happened in the past. This is the trend line. So it starts here, right here with this gap. That white trend line should have been extended. And there's quite a few reactions. So I pointed that out earlier today. We hit it, and like I always say, support is support until unless broken. Right now, I have almost 3, 4, several reactions here, enough to validate that trend line. So let's watch that. Just like the daily charts, we're building divergences, but those are just merely an indication that a trend reversal is likely, may or may not come. What we need to see is a sell signal, and that would be an impulsive break below that trend line. You have minor support right here around 75.57, I'm sorry, and then that 75.19 level I've been watching since back here, even before we tapped it. So we hit that level once. It needs to go to really open the door for more selling. But as of now, it's more of the same. And let's go to ES. ES, I have a comparable uptrend line which has actually been broken here, right there. Quite a few reactions. Broke down recently, and we've been working our way up within this very minor price channel here. So again, these are 60-minute charts, so those levels aren't as significant as what we're seeing on the daily charts, but they could spark a correction down to my first targets or support levels. Again, this is that level I've been watching and waiting to see a breakup for weeks to trigger a sell signal, and that's 28.68 or so on ES, the S&P 500 E-minis. So again, no new developments, and we may be doing this a week from now with the same thing. So the market's going up in a very slow grind, mostly sideways now. You can see since the beginning of April, there's the end of the month right there. We just grinded around in that range there. Let's look at crude quickly. We'll do that. CL. I've added, it's the same chart and trend line I've had for a while, but I did add a couple trend lines today, and I posted this earlier in the trading room. So what stands out, we had this minor uptrend line right here. We had divergent high at this point. We broke down right here very unimpulsively, not what you want to see, not impulsive at all. Came in, back tested it a couple times, and then finally rolled over a little more impulsively today. So now that gives us, what I did is I marked two levels there. The top is at 63.65, the bottom's at 63.53. So we'll call that 63.50, and it's right here around that little consolidation area. So this is our support zone. That needs to go. If that goes, that would open the door for a move to that near-term target I have of 62.80 or so right there. Remember, if the broad market continues up, crude can certainly go down, but it's had a very high correlation with the equity market recently. So the takeaway would be, let's say we break down, let's say you get to that target I laid out, was it yesterday or the day before? And maybe that was only in the trading room. Sorry guys, sometimes the videos and what I'm posting there kind of blurs together. But so let's say the broad market continues on up. Once we make a run at those highs, but you get your pullback. Yesterday I said it'd be about a 3%, just shy of a 3% gain on crude if you shorted, a 3% drop from where we were back testing. If it gets hit and the broad market's going up, crude will probably continue to rally. Probably, not guaranteed. It's two ways to play it. You either book your quick profits when you get there, or at that point just lower your stops. You will lock in gains. You may get back some of your profits. You don't want to lower it too tight, or because you'll most likely get a reaction off that level, and then you let it ride. Maybe it morphs into a runner trade. Crude, the case can be made on the daily chart, resistance, overbought, a lot of things like that, and I can see crude coming in relatively quick order when it gets down here. Why? Because crude is it's a trendy little sucker, and when you get these strong unidirectional trends, let me grab a chart here for you on USO. Go out to the daily chart. Once a trend changes in crude, the move can be pretty powerful. So you can see right here at the top, there was a drop after a strong, powerful uptrend once the turn came. So let's just say this is a kickback rally in a bear market in crude. That was a top, still obviously it's way down off those highs. Don't underestimate just how quick it can fall. Again, DWT or USO is on watch for an official trade. But I just need to see that evidence, and again, we're not even getting breakdowns or any signs of reversal. We don't have anything remotely close to a sell signal here on the daily time frame yet. We are coming up to resistance, so crude is on watch, and again, keep an eye on those 60-minute levels of CL. If you don't have a futures account, you can look at USO. I probably should have marked this chart up, but there's a nice trend line. This comes off looks like early January. Actually, that comes off the lows, I believe, on the back on the 24th. Yeah, we'd have to go back a little farther to see that, and there it is. There's your trend line. That's it right there. So there's your big trend line off the lows. It's a way away right now, so you'd have to, wait for crude to drop about almost 4% just for it to get to the trend line. But I'll tell you this too. When you do have a well-defined trend line, whether you're bullish or bearish, bulls want to buy pullbacks to support at a trend line, and every now and then when you get an uptrend, you're going to visit that trend line, and the older the trend gets, or longer in the tooth, you start to contract. That's the nature of a wedge. Your momentum starts to wane. The bounces are not as high. So right now you could also swing trade it back on a short trade just to for the next test of that level. If you want to, swing for the fences, and instead of covering there, you just lower your stop. Allow for a little kickback. I would expect the initial tag of that trend line has at least one more reaction. Maybe, maybe not. Sometimes crude just, turns a corner and doesn't look back. But there's a target, and that's about a 4% drop. And if you're, obviously, I don't have to tell you this, if you trade CL because of the leverage factor, that'll put a couple nickels in your pocket right there. Okay, and finally, for you small cap traders, here's a RTY. These are the futures for the Russell 2000. If you're trading IWM, you'll see a similar chart. Of course, I like futures because it paints a better, more complete picture of what's going on there, because you have virtual round-the-clock trades. You know, they trade to shut down for a little each day, but you get more trades, so you can pick up, some divergences and other trend lines and things that might be a little harder to pick up on IWM. So what happened here is, we've actually that line should go to about right there. So we've been wedging up, broke down, back tested, started to have an impulsive sell-off, kicked up, made a new slightly marginal new high. There it is, and that gave us this divergence, about flatline divergence, equal highs there in a slightly lower low on PPO, and about equal highs on RSI. So that's it. So small caps kind of need to do or die. If they can get up and rally up here, they're going to burn through these divergences. That doesn't mean they can't reverse. It just chips away at this case for that this was just the first leg down and another correction. And I can say this too. If the large caps are going to make a run at and above those all-time highs, small caps aren't going to go very far without them. Small caps are certainly lagging. They're still well off the highs. This would be an initial target right here on the short side. And if the broad markets are going to make it go at new highs, then you're going to see RTY and the small caps at least take out these previous reaction highs. So, like I said, if my confidence was higher, we'd have some official trades on the indexes right now, but it's not that high. Trade this as you want if you're a nimble trader. There's a lot of levels, and there's certainly money to be made on these rips and dips, but volumes have been tapering off in the broad markets, which makes it you get some very sharp whipsaws like we had in IWM this morning. I posted that on the site. You can see this. We zoom in here to a 1-minute chart on IWM. Oh gosh, it's been all over the place since then. This is the open right here. And just shows you what happens when the volumes are low and the computers are at play. So that yellow dash line right there, that's yesterday's close. So what happened is we opened up today, had a big run up, and then it turned around a reversal. That's why this candle's red. We rallied up, but it closed back down below where we opened, and that's just a 1-minute candlestick. So there was a drop of almost 0.5%, followed immediately by a reversal with a rally of 0.5%. And again, this looks like an EKG. Why? Well, these are the bots, the computers, the algos, the high frequency trading programs playing ping pong with each other. Humans can't get in, get out this fast. This is just a machine-driven market. These are, and again, this is an index. It's not an individual stock. So those are pretty big moves, especially during a period of low volatility. I mean, if you go back to the fall of, December, November of 2018, or even in January, we had the big up volatility. This wasn't a whole lot, but for what we've seen lately, that's what's going on here. So take it. You can see up until then, we're just kind of walking up, but every now and then you get these sharp moves. But the trend, at least this 1-minute trend is bullish. However, you go back in time here, and here, let's look at the daily chart. Let's get a easier board there. Let's take everything away. Just look at it clean. Here it is. So the small caps, they topped back in late August, it looks like. They fell into the lows 27%. And as of today, they remain about over 9% below where they were. So they're not anywhere close to making new all-time highs. Let's see here if I have any annotations. And here's a trend line to watch again. So there was the biggest development we had. That was that breakdown back there. That was a sell signal, and it came shortly after. I don't know why this doesn't mesh with what I just showed you. I just said late August. No. Oh, yeah, there it is. Okay, early September, late August, that was the highs, correct. And then we broke down clean, very clean bearish rising wedge. Divergences that more often than not play out. You can see everything else. So that's it. And, is this just, was that a correction in what will prove to be the longest and strongest bull market in history in time? Maybe, maybe not. Either way, all I can tell you is right now, we've only retraced an amount that says it's anybody's game. And this is really the big development would be if we have another thrust down and we take out that trend line. And there's also some horizontal support. And again, I don't want to get ahead of myself because that's quite a drop to get there. But I do these videos, I lay them out because when the markets move, they can move fast, and particularly to the downside. And right here's an example where you dropped an IWM back here. You fell in just, here, let's just go right here. This is 2 weeks. You dropped 26%. No, I didn't do that exactly right. I got to grab the top of that candle and the bottom of the next candle. 24, a little over 24% in 2 weeks. Is that right? There it is. Got it. It's hard. You have to snap to the level here. There, I got it there. And that is 25%. And yeah, 2 weeks. So it can happen, and you need to be have all your ducks in a row, because if you wait to react after you see that going on, you're going to miss an opportunity. You're going to miss an objective short entry, or you're going to this tends to happen, be trapped in your longs. You're going to see a quick drop of 5, 6, 7% by the time you realize, oh wow, maybe the charts are broken, we're going lower. It's human nature. Most people don't want to sell. They're going to say, well, I'm just going to wait till we get the first kickback rally, 4 or 5%, and get back to where I was or close to it, and then I'll sell my longs. And then what happens is the market doesn't let you out. So that's why with trading, even when things are slow right now, you just have to have a trading plan in place, and you know, plan A, plan B, plan C, what you're going to do. So all right, let's I think we'll wrap up here. Yeah, we'll wrap up here, but I get back to this chart because I do, you know, again, I realize that the majority of traders do not have a futures account. So let me give you some levels on IWM and spend a little more time on the 60-minute chart before we do wrap up. So there's your price channel we had, slightly contracting price channel, breakdown, kickback rally. So that meshes perfectly with that uptrend line I showed you on RTY earlier, the 60-minute chart. So here's our kickback rally. And so far, like, we've made roughly an equal, slightly higher high, which has put in divergence here. And this is the first time now, mind you, the first time that we have negative divergence. It's only potential. Why? Because the PPO is still pointing higher, and it could continue higher, but we need to turn that down. So let me just color this here. We need to see IWM reverse soon, and if so, we would have confirmed divergence on the 60-minute chart. Last time we had a divergent high on the 60-minute chart was right here. That was good for a short trade of about 5.3%. Before that, we had divergent high right there on the 60-minute chart, and that was good for a drop of about 5.3% or so. So keep that in mind, and if so, let's see, maybe this back test of that trend line would be our target. That would be, no, that would only be about 2%, and I'm going to have to work on this and give you some levels, but I can tell you what I'm eyeing right here is a gap back here. Let's put that line right there. You have a reaction high, a gap right there. You have a reaction low. Let's pull that down to that low. Backfill a bottom, that gap right there. Yeah, it cuts through here, but there was also a little gap in there, so we'll say that's it. 150.84. If you were to short or are currently short IWM, that would, I think, be a logical swing target based on the scope of the divergences, the pattern, everything else. And that would take us, that's about a 4% drop. Certainly the potential for more. I'll give you one additional target in case things get rolling and I don't do an update before then. 148.20, reaction low, reaction lows, and a reaction high. That's a natural level as well. So let's take it from there, or let's see what happens. Of course, we haven't even had a reversal yet, but that would be more in line with those previous two drops off those divergent highs. They were closer to a 5.5% or so drop. So we will wrap it up here. This has been Randy Finney with the right side of the chart. I hope you enjoyed it.